Some say the UK is on the edge of a financial collapse worse than 2008. Others insist it's nothing but overblown headlines. So which side are you on? The "it's all good, carry on" camp, or "this is a nightmare" camp? In my 24 years as an investor, I know exactly what it's like to invest despite economies going tits up, despite recessions, pandemics, etc. And by the end of this video, you'll know exactly how bad things really are, and importantly, how we turn things around. Chapter 1, the alarming numbers nobody wants to talk about. Just to be transparent, the last financial crisis had a really bad effect on me because of a lack of emotional intelligence and a lack of financial education. Unfortunately, I've had to learn the hard way, but since 2019, I've got my act together. I'm financially literate and now know how to invest in any market conditions. Anyway, let's start with the numbers. From April to June this year, taxpayers forked out $41 billion just on interest payments. That's 1 quarter, not a year, 1 quarter. And it's not just a big number, it's a number that's rising fast, up 26.7% compared to last year. That's an extra $8 billion burned in just 3 months. Think about that for a second. $8 billion could build hospitals, repair schools, or fund real tax cuts. Instead, it's vanishing into the black hole of debt interest. And here's the thing. These interest rates aren't just normal ups and downs. The yield on the 30-year gilt, basically the UK's long-term borrowing cost, is at its highest since 1998. That's before the millennium, before the dot-com bubble burst. We are talking about decades high borrowing costs. When a government spends more on interest than on investment, it's like a household taking out payday loans just to cover the overdraft fees. It doesn't end well. But from where I'm sitting, the government has no interest in investment or innovation. Chapter 2, the public sector pay explosion. Next problem, the pay bill. Public sector pay for that same quarter hit $74 billion, up 13% year on year. Now, inflation was running at 3.8%, so why is pay rising 3 times faster than the cost of living? This isn't just a blip, this is a structural problem, because every extra billion in pay has to come from somewhere. Higher taxes, more borrowing, or cuts elsewhere. And here's the political trap. The more the government gives in, the more demands they face. We're already seeing threats of strikes, complaints from unions, and demands for more. But the cold truth is this: public sector pay cannot keep rising. What do you think? Because if it does, it pushes inflation higher, it squeezes taxpayers harder, and it risks exactly what killed Britain's economy in the 70s. A wage price spiral. Back then, workers demanded more, inflation climbed, and eventually the economy collapsed into stagflation. Do we really want a repeat of that situation? As always, nothing in this video should be taken as financial advice, and the full disclaimer can be found in the description. Chapter 3, market psychology. Now, here's where it gets psychological, and honestly, more dangerous. Economic crises don't happen just because of numbers. They happen when people lose faith. In 2008, the whole banking system was built on the fantasy that people with no jobs and no money could keep paying mortgages. As soon as markets realised that was a lie, the entire system collapsed. Today, the UK is doing something very similar, destroying confidence through uncertainty. The school system is broken. The financial system is broken. The government, what's your opinion on how the current government is doing? The Treasury keeps floating rumours. Maybe stamp duty will be abolished. Maybe property taxes will be restructured. Maybe wealth taxes are coming. And what happens? People stop buying. They delay big decisions. When property transactions fall, the whole economy suffers. Movers, builders, decorators, furniture companies, all those industries lose business. And it's not just because of actual tax changes, it's because of whispers, because people no longer know the rules of the game. And once confidence goes, it's almost impossible to get back. Zero ambition. It's like people in the UK get punished for working hard. It feels like everyone is getting encouraged to do nothing instead of growing and pushing forward. That's what the UK feels like to me, for what it's worth. Chapter 4, the doom loop explained. Here's the most dangerous part of all. the doom loop. This is how it works. 1. The government runs a deficit. 2. To fix it, they raise taxes. 3. Higher taxes crush growth. 4. Lower growth means a bigger deficit. 5. So they raise taxes again, and the cycle repeats. That's the doom loop, and it's deadly because people don't just sit there and pay up. They adjust. They stop selling property to avoid capital gains. They hold on to assets longer. They leave the country altogether. Economic activity slows, tax receipts fall, and the spiral deepens. We've already seen hints of this. Gilt yields, that long-term borrowing cost, are at levels not seen since 1998. That's the market screaming, "We don't trust you." When markets lose trust, borrowing costs spike even more. And then you're in 1976 territory, begging the IMF for a bailout. Chapter 5, can this be stopped? So is it all doom and gloom? Not quite, not yet. There are real solutions. The government could freeze benefits instead of raising them with inflation. Say no to excessive public sector pay demands. Cut wasteful spending like carbon capture subsidies. Stop selling bonds and ease the pressure on the debt markets. Invest into technology, crypto and AI. They could encourage the country to invest into assets instead of saving, like the £1.9 trillion sat idle in current accounts and cash ISAs. In other words, show the markets they're serious about control, serious about respecting taxpayers' money. But if they take the easy way out, raising taxes, they will accelerate the spiral. And once you enter the doom loop, history shows it's almost impossible to escape without massive pain. And I can almost guarantee that the current government have one thing up their sleeves. Yes, you guessed right, more taxes. Summary. So, let's circle back to the original question. How bad is the financial crisis? Bad enough that confidence is cracking. Bad enough that we are dangerously close to the doom loop. And bad enough that if you're an investor, a homeowner, or even just a taxpayer, you need to pay attention now before it's too late, because when confidence finally snaps, it's already over. Just ask anyone who lived through 2008 or 1976 or 1931. So I'll leave you with this. Do you think it's overblown, just another scare story, or are we truly heading for disaster? This type of content is inspired, by the way, by Andrew Craig, who's doing his very best to encourage the whole country to invest into assets. Like me, but Andrew Craig is an actual expert, and I highly recommend his book, How to Own the World. I'm doing my very best with this channel and my school community to help people retire early. And if you want more info, like exactly how to invest and what to invest into, I've just published a new playlist on this very channel called How to Retire Early, Step by Step. Made up of 5 easy to follow videos and importantly, gives you all the info you need to retire early. All I would say is to watch the videos in order and take some notes. Thanks for watching.